Welcome to the Meb Faber Show, where the focus is on helping you grow and preserve your wealth. Join us as we discuss the craft of investing and uncover new and profitable ideas, all to help you grow wealthier and wiser. Better investing starts here.
Meb Faber is the co-founder and chief investment officer at Cambria Investment Management. Due to industry regulations, he will not discuss any of Cambria's funds on this podcast. All opinions expressed by podcast participants are solely their own opinions and do not reflect the opinion of Cambria Investment Management or its affiliates. For more information, visit CambriaInvestments.com.
Welcome back, y'all. It's summertime, and we got another awesome episode today. Our guest is Ian Cassel. Ian's the founder of the MicroCap Club, which is a best idea generator and networking resource for the microcap space. Ian is also the CIO of Intelligent Fanatics Capital Management, which invests in small, illiquid microcaps. Today's episode, we're going to talk all about microcap stocks, the common characteristics of multi-baggers, much, much more. Ian, welcome to the show.
Hey, it's awesome to be here. I've been a big fan of the show for many years. Thanks for having me on.
When someone says microcap to you, what does that actually mean here in 2024? How do you define a microcap?
Well, I know at MicroCap Club, we recently increased the market cap threshold just due to inflation over the last few years. But I would say typically it's, and it depends on where you're from, but usually we define it as sub 500 million market cap USD. And it used to be 200, it used to be 300. Quite honestly, it depends if the asset class as a whole is in vogue or not with the investment community. They either increase it up to $1 billion or take it back down if they don't want to be considered microcap. But it's usually around sub 500 million.
And what's the floor? Zero?
Yes. Yeah. I
mean, but realistically, is there a size that you won't look at or no?
No, not me in particular. You have the same flavors of investing in microcap as you do in large cap. It's just that they're smaller companies. I mean, you can find plenty of investors that invest deep value, that invest value, growth, industry specific, concentrated, diversified, whatever you want to find. You're going to find those same flavors down here. And so some flavors stick to what I would call the institutional band of microcap. So that 250 million market cap segment to 500 million, that's when things get institutionalized. I've always been more comfortable in the really, really small microcaps. Like usually when I'm getting involved with a company, it's usually sub 50 million market cap, just because that's just how I grew up learning investing in microcaps. And it's just where you don't have any institutions really navigating.
So I feel like when most people think microcaps, I'm trying to think what really comes to mind. They think of danger, maybe some opportunity and lottery ticket winners. Maybe just give us an overview, because there's probably some misconceptions as well as well-earned guesses about what it is when people talk about these microcaps.
Yeah, I mean, I think that the first thing you mentioned is accurate. I think people usually have a negative perception of microcap investing. They refer to it through the derogatory term penny stocks. And quite honestly, most people's entree, unfortunately, into the space is when they receive kind of a hard, glossy mailer into their mailbox promoting some company as the next Amazon, Meta, or whatever it's going to be. And it's really just a pile of garbage that paid $2 million to disseminate a fake story out to retail investors that have no idea what they do. And I used to actually keep track of those newsletters that I received. I actually have an Excel file. It was up to 51 that I received over a 4-year period of time. I don't know what service I was on, but I was getting them. And literally all of them went down 99% within 12 months. Unfortunately, most people's perception is negative and most people's first experience is negative. And I think that just creates a negative perception. And quite honestly, I think another thing that adds to the negative perception is just how small the ecosystem is. It's unlike venture capital, unlike small middle market private equity, microcap is the same thing. We're investing in small emerging companies. Venture capital's loved, private equity's loved, microcaps hated. And it's mainly because illiquidity is viewed more risky than completely no liquidity. And that dynamic is interesting. But when you kind of get down to the company specific areas, 85% of microcaps in the US are unprofitable. And if you would just look at the profitable businesses that have real businesses that are small, I think it would cut out probably 95% of the worries and risk associated with microcap investing. And that's what most of the greatest investors ever found as well. I mean, Warren Buffett started as a microcap investor, Peter Lynch, Joel Greenblatt, you go down the list. Pretty much every great stock picker started their careers investing in microcaps because it's the only area where an astute investor managing small sums can get an advantage because institutions can't invest here.
So this analogy you made is interesting because venture VC, totally beloved, right? Everyone fawning over these asset classes, but the overlap as far as size and unprofitability is probably pretty high. There used to be a lot more public companies 10, 20 years ago, and we've all seen the graphs where that's been declining, and most of that is in kind of your world. What are some of the characteristic comparisons? Why would a company go public?
I think it depends which part of the world you're looking at and how they view small public companies. Here in the US, there are fewer and fewer companies going public as small because our private equity and venture capital ecosystems are so robust and loved, and there's capital always flowing into it. So these companies can stay private longer. If you go north of the border up into Canada, their venture capital area, and yes, obviously venture capital is a global kind of investment class, but you still have real companies that are small, profitable, growing, that have real businesses, not just vaporware, going public in a small $10 million IPO onto the Toronto or Venture Stock Exchange. You still have those same companies going public in Australia. And in fact, you see some US companies that are US domiciled actually go public on those foreign markets because it's actually easier for them to raise money in places like Canada and Australia, which is embarrassing to me as an American. It's easy for them to raise capital in better terms in a populace of 30 million people in Canada or 34 million in Australia than it is with our populace of 350 million. We supposedly have the best financial markets in the world. The reason why somebody would go public is because I think the one thing that the public markets do better than the private markets is it rewards consistency of earnings growth, and it gives you a higher multiple if you can just grow revenue, grow earnings every year after year. You know, I think if you had a business selling toothpicks and it went up 10% a year and the bottom line 20%, you're going to trade at 20 times earnings in 5 years. You know, you don't have to sell your business to Brent Beshore for 3 times cash flow. He's a friend of mine, so I like to rub it. So I think the one thing that the public markets does do better than the private markets is if you have just a consistently growing, profitable business that doesn't need to dilute and raise capital, it will reward you with a high valuation and a higher valuation you would get if you would have stayed private.
So a lot of people, again, when they think of microcaps, it's not just danger, but I feel like a lot of people think in terms of like, I'm going to be a day trader. It attracts a certain short-term mentality, but your approach is kind of totally the opposite. You talk about how some of the best performing stocks ever were microcaps. Maybe talk a little bit about the opportunity side.
I'm going to reference a report that Jenga Investment Partners put out, which I think you spoke about in a previous podcast, but it's an important one. If you're looking at all global public equities, they looked at what were the outperformers during the previous 10 years. So I think in their case, it was May 2012 to May 2022. Which companies went up 1,000% or more, or 10 baggers? And what they found was that 87% of those companies originated out of the microcap ecosystem. Now, 65% of all global equities are considered microcap, but it's still an over and above a higher percentage were microcap. Then they found out that 87% had a history of profitability. And so just taking that data metric, okay, small, profitable, growing is sort of a couple factors to look at. And that's usually where I'm looking at as well. For a 10-bagger to exist in microcap, it really looks like a $10 million revenue business that can go to 30 million, 500,000 in earnings going to 5 million without diluting me. That doesn't sound sexy. That doesn't sound like the next Google. That doesn't sound like the next AI play. That's simply just fundamental performance of a small business becoming a larger small business and getting more profitable. And that right there is a 10-bagger in my world. And that's what I'm looking for. I'm simply looking for a small business that can grow revenues and earnings and not dilute me.
It's interesting because if you just think about it, and this should be obvious to most people, but NVIDIA, $3 trillion company, God bless them. What an amazing story. But if you think about what's the likelihood NVIDIA is going to go to a $300 trillion company, probably pretty small. I don't know, even a $30 trillion company, right? So by comparison, what are the odds that this $100 million stock could go to 10 billion? That seems a lot easier, and vice versa. And you get to really small stuff, 20 million, 10 million, which is really seed stage angel. We wade in that world, but to be able to get to a reasonable valuation, the numbers seem much more doable.
A lot of times, Meb, it's also what risk do I have as an investor if I'm investing in a small, profitable, growing business that doesn't need to raise money? As long as you're buying at the right valuation, right? Downside's rather limited. It's really a question of upside. Is this business going to get enough escape velocity to attract larger and larger pools of capital to feel like that business is worth a higher multiple? And the answer is yes. If they can consistently grow and earn more money, not dilute, they will. And that's where a majority of the multi-baggers in all public markets occur, is simply these smaller companies getting bigger and earning more money. And so it's just a couple core factors is key. And unfortunately, 98% of investors that invest in microcaps, they're attracted to the next story stock or whatever.
Well, I feel like there's definitely a moment going on right now. It's a little bit degenerate, the degens, and it's a little more trading lottery tickets. But there is an element of interest in the investing world. Some of it, of course, misplaced, but you are getting a fair amount of security analysis, people that are at least trying to do deep dives and participate in the modern Reddit and YouTube and Facebook groups and message boards. What was your first message board? Were you Yahoo? Were you Roaring Bull?
Raging Bull.
Raging Bull. There's too much Roaring Kitty going on. I can't get the name straight. Raging Bull. I want to hear how people, A, can get involved in microcaps, but B, let's hear how it happened for you. What was your first introduction to this world?
I have to go back pretty far, and we could probably spend the rest of the podcast with this. So I'll keep it the short version, but I'm 43. So I cut my initial teeth with investing in the late 90s during the internet bubble. And I was like a junior, sophomore in high school. My parents gave me $20,000 for my college education. That's all I was getting. And so I ended up opening an account with their Edward Jones advisor, threw the money into that, started getting some emails about small cap technology companies. I put the 20 grand into 3 small cap technology companies. They 5x'd by the time I graduated. That was 150% luck. I was mainly in voice over internet product. It was like Ibasis, ITXC. There was a couple other ones. There was 3 in particular. So I kind of got bit by the greed bug when I was about to graduate, and I didn't want to go to an expensive private school that the 100 grand I had now would be just spent in a couple semesters. So I'll just go to a local community college and commute and continue to invest. And I actually got a job at that Edward Jones office as a branch office administrator right at the peak of the market while I was going to college. And I was more or less a glorified secretary. And then the markets cratered, and my 100,000 turned into 8. And those small caps turned into microcaps, going down the other side. And at the very same time, I always thought I was going to be an investment advisor, but just answering the phones from clients calling in every emotional state that you can imagine just made me realize I don't want to manage other people's money. Investing's hard enough dealing with your own emotions, let alone layering theirs on top of yours. I always thought the advisor was going to goodnight me some assets and I'd open up a branch office down the street. And after that, I was like, I don't want that. And I was a sophomore in college by this time. And I was just trying to figure it out. I realized these companies were microcaps. And the first microcap I looked at in earnest was XM Satellite Radio back in 2001. It was around 180 million market cap.
So it was a microcap because it went down a bunch.
Yep. It was a story stock. They launched satellites up into space, $2 billion of debt, didn't really have any OEM relationships at the time, but I was kind of infatuated with the story. And I was a sophomore in college. I saw Hugh Panera, the CEO, was going to present up in New York City at a small cap event. And it's about a 3-hour bus ride here from Lancaster to New York. And so I called the conference organizer and they let me come. I didn't know back then that they would let anybody come, but I said I was Ian Cassel with Cassel Capital, had some fake business cards, and went up there, and I was able to weasel my way into a one-on-one with the CEO, with Hugh, and spent about 10 minutes with him, my eyes as big as saucers. And I just came out of that meeting was like, wow, this is amazing. So I took that $8,000, bought XM satellite radio at $1.78 per share. And instantly they started doing the right things. But the stock at that point was 42% short in the float. It was a huge short position. People thought it was going to go under. All of a sudden, like the next week, they signed an agreement with GM and then they refinanced their debt and things started to happen. It was a huge short covering rally that took it from $1.78 to about $34 in 14 months. And once again, I got kind of bailed out by luck. I turned the 8,000 back up to 100. But I usually like to retell that story because that's really when I got bit by the microcap bug. And it was just the ability for an idiot like me to sit across the table from a CEO and feel like I could get some knowledge out of it or an edge. And that's what kind of started my love affair with the space. And from there, I went on to Raging Bull, Yahoo Finance. Mainly it was Raging Bull back then, which I know you had Bill Martin, who I think started that site back in the day, which I enjoyed that conversation you had with him. It brought back some good memories. Listen to it. And that's where I was because these are small microcap companies. They're mainly owned by retail. And that's where retail congregated to talk about these ideas was on public stock message boards back then. And that's where people like me and others built reputations, but posting your ideas and thoughts.
Let's hear a little bit about your evolution. You got the bug, and let's fast forward. I mean, man, 20 years of experience in this space. You've seen all sorts of different environments, the internet bubble, the GFC, COVID.
To finish the evolution, I started obsessing with microcaps. I realized I was not employable. I just wanted to become a full-time private investor and went right from undergrad into graduate school as a way to kind of have a socially acceptable way to waste time and hone this craft. And I had a couple of mentors that I met on the message boards and just continued to compound the capital. And in 2008-9, right at the depths of GFC, cut the cord of some consulting I was doing, just became a private full-time investor living off my balance sheet portfolio. Launched MicroCap Club in 2011, was strictly full-time private microcap investor until 2018. At that point, I was in my mid-late 30s. I could continue to do this for a long time, but I always said no to outside capital because that experience working for the Edward Jones office, I was just scared out of it. Over time, I started talking to people that I thought had the volatility tolerance, not the risk tolerance, the volatility tolerance that would like exposure to this space. And so ended up launching the firm then in late 2018, launched its SMAs, and then turned it into a partnership in 2021. And it's been a blast. I feel like I'm the opposite of most fund managers because when you operate a strategy that is concentrated in an illiquid basket of small companies, you kind of have to take the opposite approach because it truly is a capacity constrained thing that I do. And I don't say that as a marketing ploy to get capital into it. It genuinely is. There's only so much money you can shovel down these companies.
How many companies you're owning? 10?
Yeah, like 10 or under. We have about 20 million in assets. We're small and tiny, but it's the right size for us because it lets me still kind of pick and choose those really small ones. I still want to be able to buy sub $50 million companies. The way I tell my LPs is like, I have no doubt I'll be managing 100 million someday, but it's not going to be from bringing on 80 million more dollars. It's going to be from going up and just letting the winners run. And the portfolio we own will hopefully look more small capish because that means we held on to some of these things that became small caps.
Not enough people really think about some of the boring mechanics. And here's an example we talked about on Twitter the other day is there's a small cap ETF out there. I'm not going to mention the name, but it was ETF of the year last year. It's raised $10 billion. But with that, it only owns 100 stocks. And if you only own 100 stocks at 10 billion and you're in the small cap space, and then you look at the holdings and how much they own as a percentage of the shares outstanding, there's stocks they own that are 10 and 20% of shares outstanding. And if you're an index fund that rebalances quarterly and your index says, oh, the stock's out, and then you got to sell 20% of the shares outstanding, historically, that's going to cost you, I don't know, what, 5 percentage points, 10 percentage points in transaction costs just to get out of that. And that's a higher percentage than ARK had at its peak. So this benefits funds on the way up. So as people are pouring money in, it helps the fund go up. But if and when that turns, it's absolutely, as we saw with ARK, accelerates it on the downside too. And so I said, look, this is going to be some roasted veal at some point because this is a dangerous setup. But a lot of people ignore certain very boring, basic blocking and tackling ideas. And it's thoughtful that you said, look, we're mindful of this. We know that it's not something we're going to raise 50 billion on.
I don't operate an institutional product. Most of my LPs are small business owners that really buy into the way I do things because the businesses I buy remind me of the businesses they own or manage. They just happen to have a public ticker symbol you can buy in a Schwab account.
We're going to get to some stocks or case studies here in a minute, but MicroCap Club, what's involved? How does it work?
When I became a full-time private investor in 2009, I had my own blog for a while. And back then, blogging was kind of new and original, but I would just be talking about the 4 stocks that I liked. And it got to a point where every time I posted on something, it would manipulate the stock and it would trade 10x the volume and go up 100%. And it's great for your ego, but it scared the heck out of me. As you know, the powers that be don't like that type of activity, especially if you want to remain in this space in public equities. So I ended up shutting down my blog, not because I was forced to, because I just didn't like that market behavior. But I still enjoyed talking about what I owned and I enjoyed what other people were talking about. So I said, why don't we just steal some ideas from Value Investors Club, Greenblatt and John Petrie were doing there, and just relate it directly just towards this smaller segment of the market. And let's try to get the smartest investors in my niche of investing to post in a private forum, not a public one, so they would feel better about posting what they really feel. And quite honestly, the amount of activity would drown out my individual voice to where people aren't just kind of crowding into what I am. And it's mainly for experienced investors too. And so we launched that in 2011. And it's been an incredible resource for me as an investor because the amount of idea generation that it generates for me now globally. First 5 years is mainly US centered, then some Canada. And now it's probably 24% of the ideas of the members are European, right? 12% Australian. So it's a very global, small community of microcap investors. And it's awesome to have some of the best stock pickers on the planet on our forum, exchanging ideas and collaborating on diligence.
Yeah, it's fun. You got a tweet where it says we've profiled over 237 multi-baggers, and I like the Hall of Fame where you have profile of some of these stocks that are 10, 50 baggers. And it's interesting because I'm always attracted to the stocks I've never heard of. And if I look at this top 20 list, I don't think I've heard of any of them, but they have such, exciting names as US Concrete and things like that, right? Where in the first one is just an acronym. I don't even know what it stands for. But as we all know, social media, and particularly in the microcap area where you say you came to this and saw the manipulation, how do you guys kind of handle avoiding or healing a community where there's people who might be out there to just promote some stocks with either true or false information? How do you guys police that?
It hasn't been that much of an issue. I mean, there's an application process to get in as a member. And so to become a member, you submit an investment thesis on your favorite microcap stock, 2 to 3 pages. And in that, you provide a bio. And quite honestly, we get like 20 to 25 applications every month. And we bring them to a vote in the community. And if you get enough votes, you get in. And if you don't, you don't. It's that simple. It's pretty easy. And probably 4 out of 25 get in every month. At the same time, we're pruning back the membership base. So people that don't continue to be active, that don't produce for the community, because it's free to be a member. It's not paid. We're constantly pruning out the dead branches, so to speak. And what's interesting, Meb, is like over the last 13 years, we've always had around 250 members, kind of adding 4, taking away 4. And it's just become a stronger community. It's small, but it's very active, over time. We haven't had too many bad actors because they usually don't have the patience or ability to get in, because a lot of times it takes 2 or 3 applications to get in. And it's also what kind of makes it a special place, because I don't give any special favors. It doesn't matter if Meb with 5 billion in assets thinks he should get in because of who he is. No, you get in the same way as the kid with $500 in his TD Ameritrade account, or now Schwab. So everybody gets in the same way, which is pretty cool. And it kind of makes for an honest type of community. And the back and forth is fairly civil. And so the inside of the forum is literally 1,000 companies have been profiled, like in a forum. And the start of the forum is that thesis. that a member has written or an application has come in that becomes a member. And that just starts the dialogue. And what's cool about, and what the real power of the club is like you can look at a company like Expel, which is like 1,000 bagger, or Celsius, or one of these companies, and you can go back chronologically and see what people were saying over the course of time. And some of those posts have 500 comments or 1,000, 1,000,000 views over time. What we also do as a community is we rank every member. So it's a pretty simple ranking. Like wherever you profiled an idea, MEB profiles company XYZ at $1. We track the performance. If it goes to $2, it's up 100%. That's 100 ranking points. If it went from $1 down to 50 cents, it's down 50%. You lost 50 ranking points. And so our ranking system is literally just the aggregate cumulative amount of gains that you've profiled since you've been a member, coffee canned. There's no cells. And so you get to see who has historically profiled the biggest winners over time. And that's what our ranking system does. And you can go in there and click and see who the ranking is. You can follow the member, get alerted when they post, all those types of tools to kind of get through some of the noise and get to the signal of the community, depending on what you're looking for.
That's fun because I'm on the website. And is it anonymous? Do you guys do it with names? How's it work?
You can do anonymous. You can share your name. It's up to the individual. But we have a lot of what I found too is 5 years after we launched, so 2011 to 2016, there was no monetization of the site. It was costing me like 30 grand a year just keeping the site looking better and bigger than what it was. And so I finally was like, all right, let's create a subscription type of feature that would at least allow this to break even for me. And what I found too over the years was there was a lot of really high quality investors that couldn't ever become a member because they had compliance departments that wouldn't allow them to post on a message board. And so this kind of allowed them to have to participate in some way to subscribe. And so we have probably 80% of our subscribers are international institutions. And also what's benefited me now having a fund is it lets me spot who the up and coming talent is, because many of our best members are the Meb Fabers or Ian Cassels when we were 23 and had 27 hours a day to research whatever we wanted. We didn't have families or jobs or businesses to run. All we did was keep our head down and try to find the next great company. And there's all those young folks are on the club, and allows me to have relationships with them, continue to build out the network where I'm, as a fund manager, hopefully identifying what these companies are early by having those relationships and the ability to network with the young next generation, if you will.
Let's hear some either case studies or personal trades that kind of illustrate some of these setups and microcaps of days yore.
I presented out at Brent and Patrick's Main Street Summit. I think I was the only one representing small businesses that happen to be public. And the title of the presentation was, "Your Small Business Could Be the Next Multi-Bagger." And I really kind of went through these case studies, a couple of which you outlined, which I'll outline further, as a way to showcase that when we think about multi-baggers, we think about the Googles, the Facebooks, the NVIDIAs, and yes, they are. But majority of them are simply these smaller companies that you never heard of doing kind of boring things that just happen to grow into something pretty special and become huge winners by just, like I said, going from 10 to 30 million in revenue. And so one of the companies, BioSign, I just talked to the CEO yesterday. That's a good example. Going back 15 years, I mean, that was a 1 million market cap, on the Canadian Stock Exchange. They in-licensed the rights to sell a product called Ferromax into the Canadian marketplace. That's a product for iron deficiency. And they immediately became profitable. And the stock went from about 3 cents or 4 cents, whatever it was, maybe it was 10 cents, up to about 50 cents. And then finally somebody profiled in a MicroCap Club in 2013. That was probably 11 years ago. Ultimately went to $10. And now it's around $10 still. But that's a 100-bagger stock, literally, that is still only 100 million market cap. And all they did was take a business from 2 million to 25 million, losing a couple hundred grand to making 7 or 8 million, and buying back stock. They pay a dividend, and this is a little $100 million market cap. It's been a 100-bagger. It's a good quality business.
How long did that take?
I think it took about 10 years. It's nice and fancy and fun to talk about multi-baggers, but to achieve a multi-bagger, you have to hold a multi-bagger. That's the tough part. And in every one of those journeys of a multi-bagger, whether it's Microsoft or whether it's one of these small companies, there's going to be a point in time in that maturation where the stock is cheap, where it's expensive, where it's hated, where it's loved, where it's overvalued, where it's undervalued. People are going to be screaming at you that you're an idiot for holding. All of those things are happening during that time period, which makes it really difficult to hold. I feel like there's only two ways to hold something like that. You either coffee can it under your mattress in the coffee can, or you decide to be a conviction investor and see if you can know that business better than anybody else that is out there. And I steer myself towards the conviction investing side. So I'm very hands-on with management, try to know everything that I can. And a lot of that is just creating a temperament for the type of stock picker you're going to be around position sizing, which position sizing just decides the amount of emotions you're going to have in a position, where your sweet spot is, because I'm comfortable with 8 positions, but the right amount of positions for you might be 30, and that's fine.
You also got to be honest with yourself about being a conviction investor. I think a lot of people, they do a light amount of research and then spend most of their time looking for confirming evidence. But to really get deep at the depths of which Ian's talking about is probably another mile under the surface than I think most people really think. And just how much work that takes, not just on a one-time basis, but on an ongoing basis, is not trivial. Which is why I'm a quant, because that's too much work for me.
No, and you're right. Like, a lot of people think doing the work is just kind of the table stakes of what it is to do anything. It doesn't mean you're going to be able to get any outsized returns from it. It reminds me of a story. I don't know if you heard this story before, Meb, but there's a story that John Madden, the NFL football coach, then announcer, told about before he was an NFL football coach, he was an assistant coach, I think, for San Diego State. And he ended up draining his savings account back then. I think it was like the late 50s or maybe even early 60s to go to a coaching clinic that Vince Lombardi was putting on. I think it was the early 60s because he was still a coach of Green Bay. And he said he went to this coach's training, and he said he sat there for an entire 6-hour session, and Vince Lombardi talked about one defensive play for 6 hours. And he said, coming out of that meeting, he said, I thought I knew everything there was to know about football, about how to play the game. And he said, after hearing Vince Lombardi talk for 6 hours about one play, I came out of that and realized I knew nothing about the game of football. I knew absolutely nothing. That's when he kind of reestablished the type of person he was going to become. And he became fanatical about football. And then he ended up, I think still to this day, John Madden has the highest winning percentage of any NFL football coach that's coached more than 100 games. But that kind of changed his whole mindset on what it means to be fanatical, and be the top 0.1% in your craft.
Well, it becomes that dedication to the whole concept of mastery and trying to separate that from simply success, which usually follows. But talk to me a little bit about your process. How do you, at this point, dig around and find these? I mean, obviously the club helps. Do you do screens on your own too? Is it kind of talking to current stocks and then management and trying to find competitors and other ideas? But how do you go about it?
Here in the US, because there's so few companies, new companies going public, mainly what I'm looking for is a transformation inside a small business that at least looks like something could be catalyzed for change. And what that normally looks like is a new management team taking over an existing business, putting skin in the game. Something old becomes something new. That's what kind of a new idea in the US and the microcap ecosystem looks like. And so I have a bunch of feelers, filters out there, even screens mainly related to insider buying, rights offerings, things of that nature that showcase skin in the game, trying to trigger me to where a transformation could be happening. What's oftentimes the case with that too is if a new management team is coming in, that stock is usually near a low because the old investors are probably tired. It's probably been mismanaged. And it's also an opportune time to look at it because it's probably trading at a value to deep value price. And if a new management team has a good strategy that they can implement and they have a track record of having done it before, which is the most important, they actually have a repeat winners, then you can get the holy grail, which is something growing at a deep value price. So that's my flavor of investing, what I'm looking for. And that's usually what triggers me to look at something. And how I find something, obviously, it'd be easy for me to say, oh, MicroCap Club's the number one thing, blah, blah, blah. Yeah, it's one of the arrows in the quiver of finding an idea is something like MicroCap Club and the amount of idea flow every month globally that's turned over.
Are there any resources that are particularly geared towards the microcap investor?
I wish I could point to just one thing. I probably have 3 or 4 different tools depending on the geography we're investing in, because we not only look at the US now, but Canada and Australia. And those data sources are a lot of times different and inconsistent, across different platforms. So when it comes to idea generation, it's mainly, I think the club is the best idea generator, but then it's through just networking, and that type of thing. And also the screens I do aren't fundamental screens. They're mainly screens relating to insider buys and rights offerings, trying to trigger me to a potential transformation happening in a business. And I usually get about 20 of them a year. And normally what gets me excited, and it's about 3 of the 20, a new management team, let's say, put in $2 or $3 million into this small 10 million market cap company. You look at their backgrounds and resumes, they did this like 3 or 4 times before. Like, it leaves you wondering, like, what are these guys doing with this small, stupid OTC company?
Yeah, that's got to be like one of the favorite screens to follow the success on not only the repeat management teams, but also the sketchy ones where this clown has done this 4 times already. We got to run away. I assume you don't do any shorting. Is that accurate? Or do you wade into those ideas?
No, I don't. It's just not in my personality to short. I'm strictly long only.
How often do these situations become ones where either you guys or, PE is such a large footprint on the larger scale? Is it a situation that's often, or even with management, where you got a good company, it's compounding, they're like, actually, we're just going to take this private. Enough of this public BS. Or we got a PE shop that's like, hey, this is at like 2 times EBITDA. Let's take this off your hands, do an LBO. I assume that's not something you do, but is that something that you cross your desk often or not often?
It happens quite a bit. I mean, to give you some metrics, I know you're quant. I think we've had 1,050 companies profiled at MicroCap Club. I think we're up to 197 have been acquired.
I don't know the extent you're willing or want to talk about your current holdings, but you can either talk about a current one or talk about another case study story historically that's particularly interesting that might illustrate some of the levers and things you have to deal with when looking at these type of companies.
I mentioned this one publicly. So this is one that we do own. And when you look at our basket as a portfolio, it kind of looks like a stew where independently the ingredients look like nothing, but it sort of tastes good when you put them together. And so I have a mining company beside a med tech company and stuff like that. It looks kind of hodgepodge, but there's usually the common denominator is the CEO or management team being what I feel is above average. And so one of the companies that we've owned really since inception is a company called Idaho Strategic Resources. The symbol's IDR. And it's really because of the relationship that I have with the CEO himself. I invested with him twice before in 2004 and 2007. And he just happened to be a really good business-minded person that just happened to be able to do it in mining, which mining is where capital goes to die, as you all know. But he just happens to have a different feel for mining, where he's really trying to create something that can create cash flow so he doesn't have to dilute. That's one that he started in 2013. It was a 4-cent stock. And we invested with him, and he took out the current management team. And all they had was like the mining rights to a certain area. And over the course of 10 years, he kind of put together a bunch of assets that now it's a profitable gold producing company. And so all of a sudden it's really unique business at the right time in the right place. And this might surprise you too, but if you actually did a screen for profitable gold producers that have domestic production, meaning in the US, that are under 500 million market cap, guess how many companies that would be? Let's include Canada, because mining, they love mining up there.
Well, then a lot there. I would say a dozen. I don't know. How many?
2.
Mining is a particular industry that management and having someone that's capable and trustworthy at the top is worth its weight in gold.
Isn't that the irony too? Because again, invert that. Most people enter a resource-based company, whether it's gold or to potash or whatever you want to call it, whatever you're investing in, and they look at it to backstop their investment by what the thing is in the ground, not who the people are at the top. And they're saying this is cheap because of the in situ value or whatever that's in the ground. But really, the only thing that matters is who's at the top, because it's really worth next to nothing unless they can get it out of the ground economically. In John's case at IDR, it's just unique because just like in every, whether it's mining or any stock, the ultimate report card for every public CEO is a long-term stock chart, because you can't bullshit that. And so you put up John's track record since 2013, he's outperformed pretty much every other mining related thing out there. It's this small little mining company out of Coeur d'Alene, Idaho with 100 million market cap that is profitable, growing production, that has tremendous assets and rare earth elements that'll probably catch on at some point. But he just makes good decisions, puts one foot in front of another, and he creates an exceptional kind of culture there as a mining company. And it's domestic here in the US, which I think is going to be becoming a more hot topic issue in the future. So that's just an example of what I'm looking for. I'm not afraid to go into some of these industries that might be unloved. In fact, co-authored a couple books on intelligent fanatics. And kind of one of the commonalities is a lot of these folks that have tremendous returns, they operated in these unsavory industries. They just did things differently. And, whether that's Franco, Nevada, doing it in mining, or the first royalty company, and that ended up being like a 38% CAGR during 20 years when gold was flat. It's the right people is the key.
Are there any particular factors that you look at that are more important in the microcap world than a traditional late stage public?
Everybody says skin in the game, insider ownership, those same things. It's hard for me to think of one factor in particular, because I've also invested in folks that only own 2% of the company, and they weren't the founder, but they were the second in command that stepped in for the founder because he couldn't cut it. And it's not the second in command's fault that he wasn't rich or didn't found the company to get the 20% ownership stake. So you have people that step in. I call it the Robin stepping in for Batman kind of scenario, where you see that quite a bit, where that person is hungry because they have something to prove, because they've always felt they should have been CEO for years. And they probably have done all the work anyway. It's hard for me to point out the factor of like insider ownership or anything like that. And I've talked to this with Jim O'Shaughnessy too. He's like, you realize that the research actually shows that high insider ownership means nothing to future returns. I said, I know. I said, that was news to me too, but it's still something that I want to believe is true, which is, as you know, that's what the markets run on. And so I can't even point to a factor like that. I normally, quite honestly, what I've found is if I can find a small $10 or $20 million revenue business or 10 or 20 million market cap business that is just profitable, I got to take that idea seriously. Because a lot of times the ones that end up being a 50, 100 bagger, they didn't look like they were scalable, but they just kept on kind of methodically growing. Like the Expels, which everybody likes to tout, which rightfully so, that was like a 2,000 bagger. Now it's about 1,000 because it came back down. But I remember visiting Expel in 2013 when it was at 45 cents a share. That was about a 10 million market cap in 2013. They were about 15 million revenue, about $500,000 in profit. And Expel makes paint protection film for cars. It really took off. Ryan's a friend of mine, the CEO. I don't own it, but I sat across the table from him and he's telling me the story. I'm like, how is this ever going to scale? How many people that have Ferraris that are willing to spend $3,000 to put this stuff in their car? Well, guess what? It kept on growing, kept on growing, kept on growing, and ended up going up 1,000x from that price. And I missed that one. And that's, I think, the commonality is a lot of people are trying to look for the next Constellation software, or they have some framework of past success and they're trying to say that's the next one, when in reality, the next big one is usually something doing something unique that's misunderstood, that's underappreciated. And they just keep on growing, earning more money. And then all of a sudden, just like it with Expel, people all of a sudden understand it. And all of a sudden, it's a great business. That label is put on it.
We've talked a lot about on this podcast about the importance of giving it time and holding. But you've also written articles where you say there's the importance and craft of selling. So what's the traditional reasons for you?
The biggest way to go broke is to use a coffee can approach in these small companies. Because usually when things start going wrong, it's obvious and you'd be an idiot for keeping to holding it under your mattress. I find the whole topic of portfolio turnover to be an interesting one in today's day and age where just coffee canning and compounding, which are all great terms, but in reality, they're hard to put into practice. And even for the investors that you think are doing that, when you look at the surface of their portfolio, they had an incredible amount of turnover, including Buffett, in his public portfolio. And since I invest in the smaller businesses, the shelf life of these businesses is just naturally shorter. I would love for them to be all long-term. And I would say the most typical win, if you want to call it that, in microcap, maybe meeting a company that goes up 100% or more in a 3-year period of time. The shelf life is probably that, 3 years, because it's a small business with probably a concentrated customer base, with probably a concentrated product line where they hit something right, or they got one big order or whatever it is. They had a season of growth and they weren't able to sustain or pivot or diversify into other areas quick enough to create something that was sustainable over a 10-year period of time. And you just have to be aware of that and cognizant of that. And so I probably owned 60 companies in the last 5-6 years. I'm still holding 7, and probably 3 of those 7 I bought in the last year. It shows just how hard it is. And I think I know what I'm doing. And it's still a difficult game to try to find something that's worthy of holding long-term in this smaller space.
What does the opportunity set look like to you today? Is it an embarrassment of riches? Are you not finding much opportunity? And the lead in for this question is, you see all these charts on social and elsewhere that shows how small caps have done relative to large caps. And so 20 years ago, small caps really had their moment. And then you've had this large cap, mega driven NVIDIA type of bull rompage that feels like it's sucking a lot of the oxygen out of the room. Are you finding a lot of opportunity? And if so, or any particular areas, or what's the deal?
I think the opportunity slate today is probably as good as it's ever been, mainly for those reasons you just pointed out. The helium force of just assets moving up market cap, specifically to 10 companies or maybe the top 50. You feel that kind of sucking sound up. One of the biggest lessons I had investing through the GFC in 08-09 was I was invested in a company called, at about 30% of my money in one. When I was growing my capital, I was usually in 3 stocks. And one of them that I invested in through the 2008 time period was a company called Zagg, Z-A-G-G. And Zagg was a benefactor of the iPhone. And in 2008, the first generation iPhone came out the previous year. In 2008, the iPhone 3G came out, I think the second generation version of it. And they were the company that were making the plastic film to put on the glass screen, because everybody realized, how am I going to protect this glass screen that's on this iPhone? And in June of 2008, Zagg was a $9 million revenue company, 10 million market cap, breaking even. iPhone 3G comes out. It's just a giant tailwind and boon to their business. Within 2 quarters, I think they were doing about 5 to 7 cents a share in earnings, from 0 to 7 cents the next quarter, 7 cents again. And even in the economic and market backdrop of that environment, where I think the S&P drew down 52% peak to trough during that time period, you had this little company called Zagg that went up 320%, even in the face of that type of outflow. And it ended up going to, I forget what it was, but it ended up going to that $3, and the next year it went to 10. And I always point to that story too, is why I love focusing on high growth, profitable companies that are very small. Because to that same point you made earlier in this conversation, there's actually a great report that Roger Ibbotson used to keep updated up until 2018. Now he doesn't anymore, but he uses illiquidity as a factor, and he provides a matrix, and he has between microcap, small, mid, large cap, and then illiquid, whatever medium liquidity is, and then super liquid. And illiquid microcap has performed the best since 1971, which is great. Great, Ian, you're just promoting microcaps. But what was more interesting is the worst performing segment was liquid microcaps.
Oh, really?
Yeah. And my belief is that during those bad market drawdowns, like in 2008, 2009, when everyone's looking to take risk off, people pull their exposure out of microcap indexes, out of microcap related funds that are more institutional products. And it's a constant bid whacking kind of in that liquid microcap segment, which is usually the larger end of the microcap segment. But the smaller end, which isn't institutionalized, there's no one there to sell them. And so they can still outperform a lot of times because they're just so small. They just keep growing, earning more money, not diluting. And that's the example of what I saw in Zag and then a couple other ones that I wasn't in that environment, but I've witnessed, is that institutional capital is always attracted to high growth companies that are growing that they don't own, even in a market environment like the fall of 2008.
What's been your most memorable investment? We've talked about a few already, but are there any that are particularly seared in your brain?
One of the companies I invested in 2006 was a company called Gold Resource Corporation. And I was the first investor to talk to the management team. They did a self-directed IPO on the OTC markets. I think they raised $5 million. And I met the management team, and they were a management team that had a history of I think they put 7 mines into production during their previous history. And that caught my attention. And their presentation caught my attention. This was 2006. Even though all we have is a property down in Mexico with some holes drilled in the ground. Our aim is to get this into production within 6 years, and we're going to be a low-cost gold producer. And everybody knows that it takes 25 years and a lot of money to get anything into production. And they said, we've done this 7 times before for other companies. We think we can do it here. And guess what? When we get this into production, if gold was at 600 an ounce back then, we think that we'll be at around 150 cost. And when we get to 50,000 ounces, we're going to pay out, obviously, a third goes to taxes, a third goes to exploration, a third is going to go to a monthly dividend. And that was the story they told since day one. And the crazy thing is they actually did it. By 2010, they got their property in production. I think they started paying a monthly dividend, which they were smart because they knew that when people were getting a monthly check, they're never going to sell that stock. And they ultimately they started like a penny a share, a dividend per month, and then they'd inch it up. And it got up to $1 per share, which they paid in a dividend by 2011 or 2012. And it was just a surreal experience because I owned a lot at $1. I ended up selling out at about $9 a few years later, ultimately went to 30. And it was a harrowing experience because when they ended up paying those dividends, I didn't own it anymore. I'm like, that was my cost basis. They're paying that out as an annual dividend. I was like, that is the craziest thing I've ever heard, especially in mining. Ultimately, the company hit a bad straight and the stock's probably under $1 today. But it's still one of those stories it's almost too hard to believe because they just bucked the trend of the industry and they actually did what they said and they paid the dividend. And it was just wild to be along for that ride and have a good relationship with management too through those years. It was a memorable experience.
Ian, this has been a blast. Best place to find more info on you and what you're up to. Where do they go?
You can find me on Twitter. It's just my name. Ian Cassel is my handle. The MicroCap Club handle is on X as well. And you can find me on microcapclub.com with 250 other smart investors.
Send in a stock pick and maybe you too can join the club, listeners. Would love to check it out. Ian, thanks so much for joining us today.
Thank you. Appreciate it.
Podcast listeners will post show notes to today's conversation at mebfaber.com/podcast. If you love the show, if you hate it, shoot us feedback at themebfabershow.com. We love to read the reviews. Please review us on iTunes and subscribe to the show anywhere good podcasts are found. Thanks for listening, friends, and good investing.